Time for the market report. More market moves and the prospective plantings report.
That's right, Mike. The USDA just dropped the annual report on crop acreage, and we'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then more USDA reports on our poultry sector and prospective plantings. And finally, in our row report, prices still making moves. What's driving the market right now? So, markets closed yet again, trending up with once again row crop split. Let's take a look. The week's biggest gain, cotton up nearly 2¼ cents, more than a 3% increase from the previous week. The week's biggest loss, lumber, down 13 bucks. That's more than a 2% decrease from the previous week. So, some USDA reports to help us understand the current state of American ag. We start with the poultry slaughter report. Then we dig into this year's prospective plantings report, which is the estimation of row crop acreage this year. Here's what they had to say. In the poultry slaughter report, certified wholesome poultry during February at ready-to-cook weight totaled 4¼ billion pounds, which is up 5% compared to last year. January revised certified total at nearly 5 billion pounds, down 3% from last year. Preliminary total live weight of all federally inspected poultry in February over 5½ billion pounds, up 5% from last year. Young chickens inspected totaled about 5 billion pounds, up 5% from last year as well. Mature chickens at about 53 billion pounds, up 8% compared to last year. Young chickens slaughtered during February averaged over 6½ pounds per bird, which is up 2% compared to last year. Average weight of mature chickens closing in on 7 pounds, 1% higher than last year as well. In this year's prospective plantings report, corn planted area for all purposes in 2026 estimated at about 95 million acres, down 3% from last year. Soybean planted area for this year estimated at nearly 88 million acres, up 4% from last year. All wheat planted area for this year estimated at nearly 44 million acres, down 3% from last year. If this holds true, it'll be the lowest acreage since 1919. Winter wheat estimated nearly 32½ million acres, down 2% from last year. Spring wheat estimated nearly 9½ million acres, down 6% from last year. All cotton planted area for 2026 is estimated at slightly over 9½ million acres, up 4% compared to last year. Upland area up by 4%, while American Pima down by 8% compared to last year. International issues seem the biggest factor in crop prices right now. However, the prospective plantings report playing a role too. We'll know more about that soon. For now, though, Don Roose says grain's growing in price due to weather in wheat country.
One thing, we switched from South America, some of the Europe, watching the weather there, to now we switched to North America. So we're clearly, watching that very close. We did get some moisture in the soft red winter wheat area, but the Western Plains, we're still in a dry drought status. I think as we move into April, we're going to need some moisture, or we're going to continue to add some risk premium to the market, but we'll see. There's a lot of people last year thought we were going to have that 89-year drought, but if you look at so far, it looks like, the extended maps that we've got some moisture coming to the Western plains, so let's wait and see. April's very key. I would say that we've got weather premium in the market already on it, but so far, the way the weather maps look for the summer, it doesn't look like it. It looks like it's going to be a more normal year, but then you know how weather is unpredictable. There's no shortage of grain in the U.S. or in the world market. So it's more about, do we take some premium out for war, for inflation, for some of these other things. It looks like the stocks are going to be about 60 million more than a year ago on the wheat. So this is a good place. We usually start to get into a seasonal downdraft if we get some moisture as we get close to May, because remember, harvest is going to get going as we get into June. It looks like we're going to be down about 4½ million acres. That's probably right, but we usually add back usually 2 million acres in the June report on corn, so we'll see. Meantime, soybean acres down up about 4½ million. But I think the big one is the stocks and all positions report. on corn. Remember, we couldn't get D's corn last year over 480. That was our top. Now we got closer to 5. And our stocks, as of March 1, about 950 million bushels bigger than last year. So we got a lot of stocks of corn sitting around and a lot of stocks of soybeans. I think when you look at it, you know, is we've added energy premium, we've added war premium, inflation premium. Now we've added fertilizer premium. So we've got a lot of push in the upside on the market. It's like a card game, you know, where it's as we cards come out, 52 of them as we go through the year, we're going to be a little bit smarter. They're coming out pretty fast right now. But if you look at it from a producer standpoint, you can put some big floor contracts in through some different products. Over $5 on corn now for the winter of 2027. So you can do things that are profitable right now for most people is what I'm saying. So I think we're in risk management territory is what I'd tell producers.
And that's it for a deeper look into the markets. We've got many different factors keeping prices high. What with war and drought, farmers have a lot on their plate.